What up, everybody? Welcome to another class full of gems here at BTSMC. So it's August. A lot of consolidation happens in August typically. I remember actually my first year trading, August was my worst month. I didn't know anything about it, right? I just came in and I revenge traded for 30 days straight. Like, I revenge traded for 30 days straight because I'm just fighting chop. I remember that was the worst month ever for me. I lost so much money my first August trading because I just didn't know better. But nowadays in August I tend to like either decrease the size or I'm a lot more conservative with the profits that I'm trying to take. Like I might not go for the highest target, you know what I mean? I might say, you know what, price probably doesn't have that in it today. It's probably gonna take the conservative target. So I take most of my position off there. So we'll get into that and everything. I want to talk about how to trade consolidations in a month like August or just in general, any consolidation at any time of the year. So that's the main topic today, and we're gonna do it through a consolidation that we saw in Nasdaq recently. And then on top of that, of course, we got the predictions coming up. I'm gonna tell y'all what I think is gonna happen in every market, forex, crypto, options, doesn't matter. I talk about everything. And I gave a mini quiz to the community on order blocks, so we're gonna reveal those answers. I'm excited to see what y'all put down. We're gonna reveal those answers in the middle of class, and that's pretty much the itinerary. So with that being said, let's get into it. All right, so look at the run up on Nasdaq. Now, don't get me wrong. It's been going higher, but you got to be careful of the market when every time you make a move up, we have a deep retracement back down. A move up, a deep retracement back down. A move up, a deep retracement back down. And mentees, just kind of look at what I drew mentees and just I'm talking about mentees for a second and just think about like what is setting up all together. You know what I mean? Things that we go over, but all together, just it's not an aggressive market. And then there's a lot. If you look at the nature of the movement, even recently, it's just this is like a form of consolidation. It's not really the cleanest movement, the most trendy movement. It's lacking energy, and a way to see energy in the market is typically fair value gaps. If you don't know what a fair value gap is, I suggest you get my free course. That's if you're watching this on YouTube, it's in the description right now. Get the free course. I'll tell you what a fair value gap is because it really helps you out in so many different ways. It's not just something to take plays off of, it's also something to get sentiment based on, like based on the abundance or the lack of fair value gaps. It could tell you a lot about movement. It could tell you a lot about what price wants to do. You'll know if it's a fake move versus a real move. You'll know so much just with a simple fair value gap or two. All right. So that being said, we kind of come to this section on NASDAQ, obviously after a move to the upside that we called out. I was looking at two different bounces last week when I met with y'all. Last week when I met with you guys, I said I'm looking for NASDAQ to run higher off of this area primarily. I wanted to see us move higher off of that, but I said an emergency PD rate for us. If we don't use this to go higher, I said I definitely felt like we're going to use this one to go higher, but I preferred the one on top. Now, the one on top did work briefly, as you can see. This is the hourly time frame we're looking at. We tapped into it. We made brand new highs in the market. At the end of the day, that's almost a 200-point move, but price ended up moving back to the downside and used our emergency one. Our emergency PD rate is the one that price really, really saw the highs off of. So that was a great move for us here at BTSMC. But then ever since then, man, it's just been stuck. It's just been stuck in the mud ever since. And so let's kind of like talk about what happens from here. So after the move up, just like a runner, it gets tired. The market gets tired, then it hits a period of consolidation. I always try to do something in consolidation. First thing I do is I ask myself, where do I feel like the higher time frame wants to go? What's tough is that, yo, good people, we're at all-time highs. Like the Nasdaq has never been this high in the history of life. So when I say where does price want to go, I have a way of getting all-time high targets that I've shown many times. If you're new here, one thing I'm what I don't know, baby famous for is calling targets at all-time highs that are pretty accurate. I've called the top of bull markets, bear markets, everything. Like just using my strategy to get all-time high targets. I do this all the time on all types of markets. So we'll see at all-time highs price will come here and then reject something I called out weeks prior. And so don't get me wrong, even this target up here is something that I'm looking for, but it's contingent upon something. It's contingent upon a certain type of movement and a certain types of PD arrays holding. PD arrays being, for example, fair value gaps. So something that I told y'all is I only like that target, for example, if we could get bodies to hold this hourly bullish fair value gap. So let me make it clear: this a BISI is a bullish fair value gap. A BISI is a bullish fair value gap. So when you hear me say the word BISI for the rest of the class, I'm talking about bullish fair value gaps. If you hear me say the word SIBI is a bearish fair value gap. All right. So this is a bullish fair value gap right here. As long as we hold this, then I like the yellow up top. So for me, in this section, what I'm doing once again is I'm coming up with a plan. Like, okay, I don't want to trade inside of any consolidation on any time frame ever. I don't want to trade on the inside. I always want to make plans for the outside. So that's the first thing I want y'all to know about consolidation. You try to trade on the inside, it's gonna look like this. You're gonna get chopped up on the inside. A lot of people were trying to fight this price action and probably blew all types of accounts in here. You don't even gotta say it in the chat. Without even asking, I know that there's multiple people in this class right now who on the NASDAQ last week blew accounts inside of here. And if you ain't blow the account, you lost a lot of profits on it. And I think the thing that I need you to do is start recognizing conditions, because inside of those consolidation areas, the market is being held in a manipulative range. I say, you don't know my life. It's all right. I know you're not the only one. You're just the only one speaking on it. And I respect that, because the thing is, as traders, we've all blown plenty of accounts and stuff, and we all have to learn. So it's nothing, no judgment. Everybody in here can relate. It's just that I'm just trying to tell y'all stuff that helped me. I learned through experience. I used to try to fight price action like this so hard, bro. Like so hard, so hard. So thing is, I'm like, okay, I know about fair value gaps. This fair value gap gotta work. This the one. I freaking draw this thing right here. I mean, I ain't gonna lie, this one low-key worked out a little bit, but you catch my drift, and then it don't work. And then I'll try to draw, I don't know. There's not even any fair value gaps in this range besides this one. That's the only one I could look at, which is telling in itself. The fact that there's no fair value gaps is telling in itself. Let me tell you why fair value gaps show energy in the market. The reason they show energy in the market is because I gotta really make you think about like how it forms. Think about how it forms. You have a candle up top. That's the first candle. The second candle opens up, drops all the way to the bottom. Now you gotta look at the third candle. What does the third candle do? Because that's the completion of the fair value gap. And once again, if you don't know anything about fair value gaps, tap on my free course so you don't feel lost today as I break this down. But if you do know about fair value gaps, you'll be following me. So the third candle, the reason it's a fair value gap is because the third candle never traveled up to the lowest point of the first candle. Meaning, in other words, there was not a deep retracement back up. Meaning, in other words, that the market is moving aggressively to the downside with little pullbacks. That shows energy. But when there's no fair value gaps, that shows you that every time we make a move to the downside, it gets bought back up. Down again, bought back up. Down again, bought back up. And vice versa, of course, for bullish movement. So like I said, like when there's no fair value gaps, it really shows you that the market is just retracing really hard every couple seconds. There's no sustained movement. So I always look at the abundance and the lack of fair value gaps, because it tells me a lot about what I want to participate in. So when I see areas of price action like this, where there's literally not even one fair value gap in the inner circle, why would I want to participate in that when I know, let's say I get a bullish entry, the next candle is gonna freaking take the whole bullish rally that I just caught. It's gonna take it all back. Even if we still bullish, I'm gonna have to get into some drawdown before I see upside again. And I just rather not be in movement like that. I'd rather not participate in markets like that. On top of that, a lot of my stop losses are based on maintaining certain fair value gaps. Not everyone, only the important ones, which is my specialty. I specialize in fair values. I'm actually a fair value expert. I can say that boldly. So I know which fair value gaps matter to the market. I think everybody can see that based on a lot of different things. If you've been with me for even 1 week, you'll notice that. So my point in saying that is my stop losses are based on fair value gaps. So if I'm getting into a play and there's no fair value gaps in that area at all, what am I basing my stop on at that point? You know what I mean? I'm just kind of like, at that point, I'm hoping and holding. Like, please just keep going up. Please just keep going up. And I don't trade like that ever, 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 ever. So my point is, when there's no fair value gaps, I don't want to be involved. And then on top of that, even if we make a fair value gap inside of a range, like once I identify this is my chop range, even when we make fair value gaps inside of it, I don't typically trust them. Now, once again, I know this one worked out. All right, it actually played out. We tapped into it. We went lower. Congrats. I don't get spoiled by that. It's gonna happen sometimes. I'm just saying that the probabilities are significantly lower. So if there's certain types of fair value gaps that I like, um, in one scenario during trend, let's say it has a 78% probability. If I notice that same type of fair value gap inside a chop, the probability might be 48%. So it's like, it might work, but it's much less trustworthy. So that's why you just stay away from them altogether and you make plans outside of it. So anytime, once again, I'm looking at chop, what I do is I ignore it. I don't trade it, but I also go to the higher time frames. So if the chop right here, for example, is on an hourly or the 15-minute or whatever, I'm gonna look at time frames above it and start making plans. So what I'm asking myself here is like, do I want to see, like am I bullish basically on higher time frames? And currently, at the moment, unless we lose certain areas, I am bullish on higher time frames. So because I'm bullish on higher time frames, I'm gonna go ahead and make plans based on that bullishness. So if I'm bullish, here's one setup that I like to see out of consolidation. If I'm bullish, I like to see the AMD setup. I've talked about it many times in here, but in case people missed it, the A stands for accumulation, which is synonymous with consolidation. So I like to see accumulation first. That's why we even doing this in the first place. Manipulation, which is where they manipulate you to one direction. So that would be manipulation. And then distribution would be them moving out of that area back to the upside as far as this example goes. So that's the D for distribution. All right, so that's the accumulation, manipulation, distribution setup. That's a very common setup out of consolidation. And the thing is, like I said, in order for me to know if it's manipulation or a real breakout, I need to know what the higher time frame is attempting to do. So if I'm bullish on a higher time frame, my expectation is that the first move to the downside would have to be manipulation. All right. And yeah, I know, like in the chat, I see someone said, hey, I started watching the beginner's course, but I haven't finished it yet. So my bad. What is a fair value gap? It's towards the end of the course. Like one of the last videos in the course, I give a full breakdown on fair value gaps for you. So, even if you were to watch that and then come back and watch this recording, you'll understand it a lot better. But once again, I encourage anybody who's not familiar with fair value gaps to tap in with the free course. It's really going to help you out. You'll understand the terminology and exactly what I'm getting at with that. So yeah, definitely. And Nick, I appreciate your transparency in here. I see you said, like, you were up about 2K on the funded, and that chop just took it all back. And I've been there before, bro. I've given back. I was telling my mentees on Thursday, I've given back $12,000 before trading inside that chop. Yeah, you could tell I was really emotional that day. I've done it. Like it's not fun. Chop and take your soul. Real like you gotta maintain your emotions, but that's why I said eventually I just stopped trading inside of chop. I just stopped trading on the inside of chop. I just trade outside of it. Yeah. Not fun. Not fun at all, y'all. Not fun at all. But my point is, so once you get direction from higher time frame, you know which side is manipulation. So I showed you guys the AMD setup. Now, what if it just breaks in the direction that I want to see it in? All right, there's two things I look for when it breaks in the direction that I wanted. If the higher time frame told me higher, when it breaks in my direction, I want to see fair value gaps on top of it. And yes, it will, Tanika. If you're in my free Discord, that's where it's going to be. If you're in my free Discord, I'm not sure which community you came from, but if you're in my free Discord, yes, it will. Now, so yeah, I want to see fair value gaps on top of the consolidation. If I'm bullish, then I'll believe in it and I'll trade in that direction. That's cool. Another thing that I look for is bearish PD arrays on top of it. So you see there's a bearish fair value gap right on top of the consolidation. The key word in bearish fair value gap right now is bearish. That's technically supposed to send price to the downside. Technically. But the only how it's going to send price to the downside is if the market has a bearish objective. For me, I just told you, at the moment, I believe the market has a bullish objective. So if it were to come into this area, I don't think it's going to reject. I actually think it'll trade past it because I went to the higher time frame already, and the higher time frame told me we bullish. So now that I'm back on the lower time frames, I don't think that this bearish fair value gap is going to work out. I don't think it's going to work out. The higher time frame snitched. That's how I like to put it. It's like the higher time frame ratted. That's what I always say. It snitched already. The higher time frame told us what's up. So I'm not really tripping on this hourly bearish fair value gap. I'm not tripping on no 5-minute bearish fair value gap, no 15-minute. All of this stuff is noise. That's how I look at it. But with all that being said, good people, with all that being said, my good people, it's still safer to wait for it to clear this area. So if you're nervous about a bearish fair value gap on top of your consolidation, maybe you wait for that to get cleared out first and get involved on top of it. So you could wait till price clears this area. Now you know nothing is supposed to stop you from getting back to the highs and above to your bullish targets above. So now when we move past that, if price were to move down one more time, what are you looking to do? You're looking to buy the dip. You're looking to buy the dip. Let me say that again. If we move past the only thing that's supposed to send us bearish, which is that bearish fair value gap, if price were to retrace after that, what are you looking to do? Buy the dip. What are you going to buy the dip on? Maybe using this as an inversion. Maybe using some type of bullish fair value gap here. And maybe there's a bullish order block that formed right here. There's all types of different things that you could use to get into a play. I don't use EMAs and SMAs and stuff, but hey, maybe you like, moving average bounces or something. Maybe there's a moving average right here that you could use to get involved in your play. However you trade, I'm just simply saying that once we move past the only area of turbulence, now you look to buy the dip because you know it's probably going to go to the swing high at that point. So once again, for as far as this consolidation goes, let's kind of recap like the steps. All right. So the first thing is don't lose 12K inside a chop. Like, let's not do that. Let's not go back to them days, right, people? Let's not do that. We don't trade on the inside because the things that you typically take trades on the inside of consolidation are low probability. Now, in my mentorship, I go in detail on how to recognize the chop before it even happens, before it even forms. Like right now, I'm telling y'all how to treat it once it's already here and you recognized it. But how many of you have gotten chopped up first? 2 hours later, you're like, oh, dang, I'm in chop. Like you didn't even realize it at first until like you already blew the account by the time you realize you're in chop. So, I have a lot that I can say about that too, but to me, that's just a separate class. Like how to recognize chop before it happens is just literally a separate class. Now, obviously, like I said, I outlined that heavy in my mentorship, but if I got into that now, class gonna be 4 hours long. So right now, I'm just teaching. Once you guys do notice consolidation, that's what we're talking about. So once again, first lesson is don't trade inside of the consolidation once you recognize it. Wait for breakouts. Now, how do you handle breakouts? Step number 2, after you realize you're not supposed to trade inside of it, step number 2 is to ask yourself, what is the higher time frame telling me is supposed to happen next? Where is the higher time frame pointing me to? Well, the higher time frame, for me, I go to the 4 hour, and the 4 hour to me was, is pretty clear. For me, as long as the 4 hours holding a certain area, I'm bullish. And so I have highlighted that area. For me, it was as long as bodies is holding this, I'm bullish. Now, I have also targets above. So until proven bearish, I'm bullish. Let me say that again. Until proven bearish, I'm bullish. So the higher time frame told me, yo, Rell, stay bullish, bro. Stay bullish, my boy. Copy. Now that the higher time frame told you a direction, now that you know that we're in a bull market, things have been moving bullish, everything looks good. Maybe you use some other confluences. Maybe you look at let me tell y'all some confluences real quick. Not to get too sidetracked, but let me tell you some confluences. Matter of fact, let's write this down so we on track. 1, don't trade inside the chop, right? Let's make sure that right there is is understood. Now, number two, we said where is the higher time frame sending us? All right. That is the second thing when it comes to chop. Now I'm gonna make my side point. This is as far as if you have a problem, or if you struggle with knowing what the higher time frame is telling you to do, you could use other things for confluence. Like for me, for example, I mean, I ain't gonna lie, I don't really struggle with it because I do it with the chart that I'm looking at. But that's just once again another lesson. But for you who might not be that good with knowing direction yet, look around the market. So I'm on NASDAQ. What are some of the biggest companies I could think of? What, Microsoft, Nvidia, Apple, you know what I mean? Insert what, Amazon, things of that nature. So you could look at the biggest companies that are going to affect the NASDAQ and look at their charts. And if overall, as you look at them, they all are giving you signs that price wants to move higher, you can kind of tell that the market is not really ready for a big move to the downside because Microsoft ain't reach its objective. Nvidia didn't reach its bullish objective. Apple didn't reach its bullish objective, things of that nature. So you can use those tickers as a form of confluence. You might use the US dollar. You could look at DXY, the US dollar. You could look at the S&P 500, of course, which I always do. And use these things as confluence to let me know, like, okay, the NASDAQ is not done with its movement to the upside. So once again, that's one way that you can, get sentiment if you're not so good with figuring out via the candles. All right. I don't use news in my analysis and I don't recommend it, but that's me. Anyways, so we got number two, bet. All right, number three, either look for AMD setup or a breakout in your direction with fair value gaps. All right, that right there. Okay. Now, iPhone says NASDAQ actually lagged last week, which means it's bullish until it hits its resistance area. So something you can, so that kind of goes along with my confluence thing that I was talking about. The S&P 500 and the Dow Jones were both very much more bullish than the NASDAQ was multiple times last week, which is something that kept me bullish on the NASDAQ as well, especially because I was and am involved in the NASDAQ swing trade to the upside. So my fault. I meant to say a Dow Jones swing to the upside. So I've been definitely watching how the Dow and the S&P both have remained strong while the NASDAQ was weak. A lot of times the NASDAQ was faking people to the downside, but really you can see the overall market is actually very strong right now. So yeah, that's I agree with you. And yeah, copy. All right, now, so y'all got the steps, and let's kind of like get into. Well, first of all, those are the lessons that I mainly want to say, and mainly how I handle consolidation. And I think that it's gonna do you. And actually, let me put that back in case people need it. It's gonna do you wrong if you try to fight chop. Man, I can't stress that enough. I'm not saying you can't make money in chop. I'm not saying I can't make money in chop. I made money in chop plenty of times in my life. What I'm actually instead saying is, what is the most high probability thing you could do? Do you like, y'all tell me, maybe I'm bugging. Do you tend to make more money in trending markets or choppy markets? Just from your history thus far. Like for me, I know for me, I make a lot more money in trend than I do in chop. A lot. It's not even close. I'm not even gonna lie to y'all. Not even close. So if I notice I'm traded inside of a choppy market, why would I, do that to myself when statistically I've done so much better in trend? It is like a no-brainer. So I just instead avoid it. You know what I mean? I just avoid it. All right, so cool. Here we are. Once again, any moves we make is not going to be inside. It's going to be outside. So we waiting for that. What comes next? All right. Canada upside. We still chilling. Let's see if we get a breakout to the upside here. It's getting close, right? We getting close to the highs. Let's see if we get a fair value gap on top of it. Let's get a breakout to the upside. Boom. Dang. Tough, right? Very tough. But are we panicking? Are we panicking? Right? We're not panicking, good people, at all. Because we didn't trade this on the chop. The higher time frame told us stay bullish as long as we hold this purple area, right? We stay bullish as long as we hold that purple area. All right, now what are we looking for? Okay, we're either looking for an AMD or a breakout in our direction. Well, our direction was bullish, right? Did we get a breakout up here with fair value gaps? Right? Did we get a breakout? I ain't see one. I don't know about y'all. I definitely didn't see one. Copy. So it looks like an AMD to me. Exactly, Monk. You ain't see that. So AMD vibes. Copy. All right. Now, this we seen the A accumulation. We've seen a manipulation potentially. Now I'm looking for distribution, which means I want to see price reverse from here and go and take these highs. That's what I'm looking for right now. All right, so let's come out of the 5 minute and kind of see what's going on here. Now, here's the thing, right? A lot of y'all learn about fair value gaps from all types of people, and you know, it's just so much misinformation on fair value gaps out there that I just really hope that I don't know, man. I'm sorry, it's just a lot of misinformation on fair value. I don't want y'all to get killed trading fair value gaps, okay? I explained AMD a little bit ago, Remedy. AMD is not a ticker. It's what I was explaining with that's why I made it in the where is that? Tweaking. Oh, my fault. That's why I made it an abbreviation here instead of the ticker symbol, not AMD, the stock. Accumulation, manipulation, distribution. I talked about that at like maybe like 10, 15 minutes ago. It's a setup, yeah. So yep. So right now we got accumulation, we got manipulation, we're looking for distribution. And what I'm saying is you see a very large fair value gap right here. And I don't want you to be misinformed and think every time you see a huge fair value gap, that means you need to short it. Big, major mistake that's lost me a lot of money before I knew what I was doing up here. Right? I used to think, oh, this is a huge fair value gap. Therefore, price gonna come into it and definitely reject it. And then I got people out there that's telling me price has to reject the 50% of a fair value gap before it goes lower, which is also horribly it's horrible information, horrible teaching right there. It's not true that price always has to come to the 50% to reject. And that's also not true that if it's a bearish fair value gap, we got to reject the lower half. That's also not true. It's really just situational, and learning those situations is the key. There is a lot of nuance to the things that we talk about here. But see, this fair value gap, for me, I did not like that fair value gap past a certain level. Put it like that. So put it like this. By the time we got to the 50%, for example, I already know we're bullish, right? Even though it's a bearish fair value gap, a huge one, like, yo, this looks, nah. Very bad sign to be up right there in this specific scenario. All right. Now, if a question says, if we barely tap into that fair value gap, does it still count as using it? Absolutely. We can technically literally barely touch it, what we call IO Fed, and come down. Yup, that happens. That happens for surely. And sometimes we want that. It really depends on the situation. Sometimes we want just this and that's it. Because if it starts coming up this high, we know that's a bad sign and we bullish. I remember there was a week, maybe a month ago, there was this happened. I talked about it in this live class before. The market was like very bearish, and I showed you guys how even on live, because I live trade with the members, once price came up a little bit into this huge fair value gap, we went bullish and we caught a move all the way to the other side because we knew like, oh nah, it went up too high. Never mind, we bullish. Everybody, let's get it. The whole world is still trying to show that we know what's up. And so just understanding like those nuances to fair value gaps could be extremely, extremely helpful for your trading. Yeah, exactly. Gotcha. I bet. So this at the time of this candle is 8:35 a.m. Here's another quick tip from my experience thus far. What I noticed, y'all, those massive pre-market dumps, like these ones right here. I just don't try to trade that too much. There's a lot of times after that forms, there's a lot of consolidation heading into market open. Another thing about that is if they met the objective already on that flash candle, then you really got to be careful of reversals when markets opens back up, because like Afon said, they tend to get bought back up. So what I mean by that, good people, is this. Let's see if I could like outline this real quick. Gotta use imagination a little bit though. All right. So imagine that the objective is for price to come to the purple, which it actually is clearly, right? We're looking for price to come to purple. If in the pre-market, CPI comes out, PPI, NFP, I don't care what it is, one of those major news events come out at 8:30 a.m. and we have a huge flash candle and it stops right here, right? Like a huge candle stops right there. Remember, the objective is the purple, not right here. If it stops right here and it consolidates heading into market open, so basically for the next hour, it kind of stays in this vicinity. Around market open, I'm expecting, once again, either an AMD to go down or just simply a breakout. It doesn't matter. I'm either going to trade the AMD or I'm expecting, but either way, I know that the objective is going to get hit. Now, if the flash candle, but in the pre-market, gets us right next to it or ultimately brings us to the area, then because we met the objective, they're not going to do the reversal pre-market. They'll probably do the reversal once the market opens to shock the world, because you got to think about it like this. Everybody got FOMO right now. So right now you could expect consolidation. Everybody's like, yo, soon as 9:30 hit, options traders got their phone ready. They on freaking Thinkorswim, Robinhood, whatever. They got puts on their watch list. They done sold their whole everything just to have money for these puts. They ready. As soon as 9:30 hit, boom. I'm in puts. Everybody got that mindset because they don't want to miss the drop. You feel me? So they stop right here, let everybody get that FOMO to the downside, and then they violate you. They violate you at market open. So once again, you got to look at, first of all, you have to understand what the real objectives of the market are. Objectives is such a major part of what we do. But once you understand those objectives, you could use the accomplishment of those objectives or the lack of accomplishing those objectives as an indication on how you should handle session open. So just to quickly recap, in case you're a little lost of what I'm saying is if we didn't hit the objective before market open, you'll probably see continuation. If we did hit the objective before market open, you'll see consolidation and a reversal at market open. You got this on replay if you need it. All right, so this is a case where we got there. So I wasn't looking to trade this in the pre-market. I'm chilling, y'all. I'm chilling. You feel me? I'm chilling. Waiting for market open because that's where I'm expecting reversal. All right, and I'll actually, even show y'all briefly here. I put this in the Discord already, but this is the trade that I took out of that area, out of the purple area. You guys can see my trade. What did I say? We go consolidate, and then once market open comes, then you see I get involved to the upside and everything. So, but we'll get into that in a second. So right now, for me personally, because I'm expecting chop inside of this hourly BISI, which is the purple area, I'm chilling. I don't trade chop. Just like I ain't trade chop up top, I'm not gonna trade chop on the bottom. Okay. So understand what areas are important. And actually, let me read the chat. My bad. I know I missed a couple of things. It says, are they typically just trying to freak retail traders out so that they can sell as well and then to get bought up for cheaper, like a liquidity sweep? At all times, market makers are looking to manipulate retail traders. They want everybody on one side so they can profit on the other. That's why I'm always nervous when things are too obvious. When everybody's on one side, I'm always nervous. I start entertaining the other side. I'm always guided by technicals no matter what, but typically my technicals do align with that. So a lot of times, once again, like if everybody on one side, you should be nervous. You feel me? But ultimately, just understanding certain concepts will save you from all of that anyways. That's why I really highly encourage just getting behind the right information, which is just so scarce. Like not too many people really understand price action how they really think they do. iPhone says retail traders got put on their minds, institutions got calls on their minds. There you go. Exactly what I'm getting at, right? The typical opposite sides. So they want to fake you one way so they can go the other way. And now, one thing I would look at heading into this is this fair value gap. This fair value gap is actually decently important right now. So I want to see how we handle that area, because remember, even though I said that the market's supposed to bounce in the purple area, I could be wrong, y'all. Like, let's not get it twisted. I could be wrong. Everybody's wrong. Some people wrong more than others, but I'm wrong sometimes. It happens. So let's see. I'm chilling. That fair value is gonna mean a lot to me. All right. So okay. When I see price traded above it, to me, I'm all right. I'm already thinking like, all right, we probably gonna make that move. We probably gonna make that move at market open, but it might not be ready yet. It might not be ready yet. So I'm gonna kind of chill. I'm not mad at a person testing out if it's gonna be a V-shaped reversal right away. So right now, we didn't really consolidate yet because this really could be a V-shaped reversal at this exact moment. We could be looking at a V-shape. As much as I might expect chop, guess what? Once again, I could be wrong because it's a probabilities game. What if the market just did this in the pre-market? It happens, y'all. I've seen it do that before. So I'm not mad if you test it out. The way to test it out is understanding what areas should hold if we're truly bullish right now. If we're truly, truly bullish right now, y'all, I'm telling you, it's very unlikely that price would invalidate this bullish fair value gap right here. So if you wanted to try this out, it's about 7 points wide on the NASDAQ. And if you can't risk 7 points, you over leveraged. So if you want to try out this 7-point stop loss, feel free. But once you see this getting validated, in my opinion, you should just wait for market open. So let's test it out. Let's see if we're going to use this to go higher. Well, boom. We close under it, invalidated. So in one side of your brain might be saying, well, we invalidated a bullish fair value gap. So doesn't that mean we bearish? No, it does not mean we bearish. How do you know? Because bears, through other understanding, already show me that we're not having bearish delivery the right way. So I told y'all this fair value gap was important. Remember? Didn't we already invalidate that? Now you fighting price action because the reason you went long in the first place is because we invalidated that bearish fair value gap. That's why you was bullish in the first place. So now when we invalidate the bullish one, why are you going back bearish? Now you fighting, right? Now you fighting. Bearish got invalidated earlier. We talked about that. Don't forget that. Bullish just got invalidated. For you to try again in the same area, you fighting. That's why I say, just understand this little section is gonna be nonsense for you, and that's exactly how you get chopped up. Correct. So let's see what happens going forward. What is it? 991. Let's see how this goes. And so what do you notice right now? Sideways movement. We really not on nothing right now. We kind of chilling, and it's 9:15 at this moment, so we getting closer to market open. So, like I said, if you wanted to try out the V-shaped reversal, I'm not mad at it. Just understand what PDA rate should hold. If you're not familiar with the terminology PDA rate, by PDA rate I mean what area that's supposed to send price either bullish or bearish should hold. So the area that should hold is this fair value gap. That's what's supposed to hold if we bullish. Once it did not hold, price is talking to you. Price is whispering sweet nothings in your ear, but you don't want to listen. It's telling you, yo, we not bullish, gang. And over here, it already told you, yo, we not bearish, gang. So if it told you we not bearish and it told you we not bullish, why are you still fighting? It's chilling right now. It's going sideways. If you're not bearish and you're not bullish, there's only one other option. You're chopping, you're consolidating, you're accumulating, you're going sideways. I bet. So it's recognized, and we chilling. You waiting for market open, like I said. Look, up, down, up, down, up, down. We not going nowhere, good people. So it's people that's blowing accounts just trying to fight this. They going long with 20 minis, going short with 40 micro. It don't like, yo, just stop. Just wait. So now, what is this? Okay, now we starting to move. Wayne, look, this is 929. What do you notice heading into the 930 candle? I'm gonna let y'all answer that, and I'm gonna grab my phone charger, but I'm gonna come back in like 10 seconds. I want to see in the chat, what do you guys notice as we're heading into market open? What do you notice? And I'm talking about on the chart. Let me get my phone charger. Hold on. All right, we back and better. We back and better. So in the chat, what I'm seeing here, I see a fair value gap, fair value gap, fair value gap. Yep, breakaways, fair value gap. Break out to the other side after consolidation. There we go. Now, I wouldn't necessarily call this a breakaway personally. It doesn't have to be a breakaway. But I hear you though. It doesn't have to be in this context. I wouldn't necessarily say it's a breakaway, but it could be. It just I'm not expecting it to be necessarily. Like I'm not mad, for example, if price were to visit this, but it needs to visit it in a certain manner. But that's another story. But regardless, I agree with everybody. Is a bullish fair value gap right here. Guess what, y'all? Headed into market open, that is an important area for us to hold. Very important area for us to hold. So let's see. And hey, I'm not even mad, y'all, if you wait for price to break these highs. That's okay too. That's okay too. But regardless, you got something to work with right here. Headed into market open. Let's see the 930 candle. Yeah, so the 930 candle, first it trades up, it sweeps the highs, comes down into this bullish fair value gap. Now, once again, I'm not mad at people doing experiments. So this fair value gap is 12 points wide. If you want to risk 12 points to see if we're about to have the pop at open, why not? I don't think there's anything wrong with it. It's 12 points. I'm not a person who keeps stop losses at the swing low. You know what I mean? And my stop losses is not down there because I understand certain things about the market. And my humble opinion, putting stop losses at the lows like this typically means a person doesn't know how to recognize incorrect movement. No offense to anybody. I'm just telling you, it's kind of like a no-brainer to me, right? When I see certain things get invalidated to me, I already know we're likely gonna run these lows. So for me, I don't need to hold to watch that. So for a person to say, put your stop loss at the swing low anytime you get into a trade, it's because they don't know how to recognize something that should not be happening. So for me, what I understand is if we are bullish, this fair value gap right here has to work. This one right here has to work if we bullish. If it doesn't work, guess what? We probably not bullish. Make sense? I hope that makes sense. So then I would cut it. That's what I say. It's nothing wrong with trying this out. Let's say you try this out. Let's go ahead and put 3 cons on it. You feel me? And press buy. And let's say your stop loss is slightly below. If you want, you could give it room for the fair value gap. There's a baby one right here. In my opinion, that's not the one I want to see price trade to. But if you want to give it room, that's okay. Because as you guys may know, sometimes price wicks below these areas, but the bodies still hold it. And so it's still valid. If you're new here, we want bodies to hold fair value. Yes, we're not really as concerned with wicks. We want bodies to hold fair value. All right, in the chat it says, what if it wants to test the order block after failing the fair value gap? I don't see a valid order block on my screen right now. So I really hope that y'all pull up to the order block masterclass so I could show you guys valid order blocks. And just give me a second so I could erase the screen, somebody writing on the screen and all that good stuff. Let me erase that right now. All right, cool. So anyway, yeah, I don't see a valid order block on my screen. So for me, I wouldn't be using it. And on top of that, even if there was a valid order block on my screen, it will be out of context, if that makes sense. Like just because definitionally it might make sense, like, oh man, it caused a break of structure and this, that, and the third, all these different criteria people use for OBs. It's about the location of the OB and what the overall objective of the market is at this moment, you know? Man, it's all good, Pat. It's all good. I figured it was an accident. I don't think anybody up here being funny, but appreciate you explaining regardless. So yeah, yo, like this is the only spot. So let's see what was going on. All right, cool. Bodies holding it. You could also see bodies held the 50% of the fair value gap. That's a good sign. We like that. But bodies held it nonetheless. You in the trade. Let's see if we could get some continuation out of this. Okay, because right now we just popped to the upside. We were bullish anyways, and we just used a bullish PD array, which is even better because I always talk about how when price is bullish, it uses bullish PD arrays. Once again, an example of a P rate is a fair value gap. So we'll use bullish fair value gaps when we're bullish. It's that simple. We're using it, right? Bet we popping out, quick retracement. For me, I don't really think there's necessarily a reason to move my stop. I mean, I might move it to like right here because I don't want to see it come back under this fair value gap. But other than that, I think, you know, it could stay right here. That's fine. All right, we're moving higher again. Beautiful. Love it. Love it. Love it. Yep. Yeah, I know how that go, Monty. But that's what's up. Glad that you caught this move some days ago as well. And cool. So at this point, to me, first of all, we're good. Everything looking great. I wouldn't want to see price come back under this red candle. So in general, while I'm in my trades, y'all, I don't keep my stop where it's at for the remainder of the trade, because once again, people who do that, in my opinion, don't know how to recognize incorrect movement. So right now, to me, it's very unlikely for price to come under this red candle that I'm basing this on and still be bullish. If it were to do that, I can always get back in. But for me, I would rather protect my position, protect profits, and protect against any potential losses, of course. So there's no reason for me to be up this much on a trade, watch price do something I know it should not do, and still be holding it. Like, why? Why? Just because I'm hoping, I'm praying to God it just reverses? I'm not doing that. Yeah. Now, the significance of the red candle has to do with market health. Now, that is definitely a mentorship topic. I would never go into that because it has to do with Bag Talk concepts. So people know about smart money concepts and stuff, but there's Bag Talk concepts. I got my own discoveries in the market. But it just has to do with just certain things that certain areas in the market you don't want to see price go back to. You know what I mean? In certain context. And so for me right now, I would want to see this red candle hold if we're gonna move higher. Okay, so that's why I put my stop loss right there. Because if that don't hold, I probably wouldn't want to be in this trade no more. Okay. I will be watching this fair value gap though. That's also something that I will watch low key. So these are things I would draw on my screen. And I'll be watching these areas as price moves higher until it's out of context again. Like right now, it's still in context. I'll be looking for it. Did price touch it here? I'm not sure. Looks like price just missed it. Yeah, price just missed the area, which is fine. That's cool. Hey, let's stay bullish, right? I don't want price going backwards. All right, so we in the upside trade, are we not? All right, things look good here. Things look good. Things look good. So first of all, you can look at this very large fair value gap here. You see how we pretty much eating this whole area back up. And I want to remind y'all that the third word in a fair value gap is gap. It's gap. What y'all learned about gaps when you first came into trading? Anybody in the chat? When you first came into trading, what they tell you? Gaps what? Gaps what? Gaps get filled. Thank you, Monty. Gaps get filled. So I think you guys, I want you to remember, gaps get filled. Fair value gaps get filled. And liquidity voids. In other words, your standard gap gets filled. Exactly. So good stuff in the chat. I see y'all saying it. So that's what's up. So we all on the same page here. So don't think every fair value gap is meant for rejections. They not all meant for rejections. You got to understand contextually what it's meant for. All right. Now, Shania said, how do we prevent early entries? Early entries on the upside, are you talking about? Like, what you mean? What you mean by early entries in this context here? But okay, so she said she means on the upside. Understanding what areas you want to see hold, and that's why I said this right here could be considered an early entry based on the fact that you're getting in at 9:31 a.m., which I do sometimes, but it's all about risk to reward. So just think like at 9:30, we had this move to the downside. That's the red candle. At 9:31, you know, we're still inside of this fair value gap. I don't think it's a bad idea to try it out because it's only 12 points worth. So if you're risking 12 points, but what are you aiming for? You aiming for something, let's see. From, let's say 850 to the highs up here at 967. Would you risk 12 points to make 110? I would. I don't know about y'all. I'll risk 12 points to make 110. 10 times out of 10. I'd never not do that play. You know what I mean? Every day, all day. Y'all see that in the chat. Y'all see it right there every day. So that's how I look at trading. Typically the areas that I'm entering plays on are typically gonna have small stop losses. But I just hate when people might look at me trade and think, like, let's say I came in my live trade or something, and you guys are like, dang, his stop is that close. It's like he might not want to lose money. Bro, it got nothing to do with money. Nothing. Like my stop losses never have to do with money, ever. My stop losses are all about areas that I want to see holding in the chart. And I just happen to know what areas are important. Like right now, like I said, if I'm bullish, this area has to hold. So my stop loss is based on this area. That's it. That's it. That's all. That's what I'm trying to say. I don't need to watch price melt all the way down here to know I'm wrong. Like, oh, we lost the low, guys. We're out of the trade. You lost the extra like 60 points or something like that for what? I knew we was going to those lows if we didn't hold that area. And that's what I'm trying to say. So I wouldn't consider, I don't really think about like quote unquote early entries. I just think about where am I invalidated on my trade? I'm invalidated if we lose that fair value. That's it, that's all. So that's what I would say. Knowing the areas that is important really helps out. Same thing here. Like if we would have lost this area, I might trim my position. I'm fully out of everything if we lose the red candle right here. As we move higher, I start to slide my stop up. Like I said, like even like right now, I don't really want to see us invalidate this fair value gap. So I might slide it up just a little bit right there, at least a certain amount of my position. All right. So as we move higher, I can say the same thing. Okay, so there's a couple things. Now, in the screenshot I showed you earlier of my trade, you guys will see, let me just bring it up instead of talking about it. Look, you guys will see that I actually held through this pullback that we're about to watch. Now, this is the 2-minute view. What you see on the screen on trading view right now is the 1-minute view. This is the 2-minute view on the right side. Now you guys can see I actually held through this pullback that we're about to witness. But I'm not necessarily saying you had to do that. I'm not necessarily saying you had to do that. I was really trusting in what the higher time frame told me was going to happen. And I could have got burned by that, low key. I could have got burned by, I could have taken much less money than I wanted to. Now, I was never going to watch that thing trade all the way back down and make me go break even or trigger some type of negative stop loss. No, but a trade that's thousands of dollars worth, I probably could have, had half of that profits. So I'm giving that disclaimer real quick. Now, what I really recommend in this scenario, I really did not want to see price lose this area right here, right? I didn't want to see price lose that area. I didn't like that. So if a person lost this area, I'm very much cool with them going cash. So I'm actually going to stop the play out just for example's sake. First and foremost, you made a good amount of money, right? At this point, you got into a trade at 847. We about to exit here, like let's say 930. So that's what, 83 points. So you made an 83-point play. I think that's pretty solid for a trade on the NASDAQ. You feel what I'm saying? That's pretty solid. It's a good amount of money made on that. I think a lot of people will make that now. All right, so thank God. Real quick, Remedy say, I love when you say that. It makes me think of God, trusting a higher time frame, trusting a higher timeline. That's a fact. That's a fact. I'm sorry, I got to make a quick analogy on that. It's really true. Like, even when you're going through certain setbacks in life, if you trust where God is supposed to take you, you don't really look at setbacks as like something super negative. You really look at it as like setups, right? To develop you, to grow you for a huge comeback, because you know where God's taking you, right? You know God taking you to something higher. I truly believe in that. That's representative of my whole journey. But I'm just simply saying it is a good way to think about it. That's a fact. So it's kind of like, because I know the higher time frame is telling me we going higher, then I don't really look at these retracements to panic. But I will say on a trader level, yeah, I would want to see us hold this area. So let's go ahead and stop out the play for that. Money's still made. And all I say to myself is, okay, did I get to the objective? The objective is these highs right here, right? That's the objective. Did we get there? No. We lost the area that we typically will hold if we're going to run the yellow line, right? That would typically happen. So since that got lost, you could take profits. Why are we taking profits? It's not about money. I gotta reiterate that, y'all. We're taking profits not because of money. We're taking profits because of areas on the chart that we learned about. These areas typically would hold if we're really going to the yellow line. So when it doesn't hold, yeah, expect a deeper retracement, maybe even a reversal, maybe even a reversal. So let's watch that. And when I'm watching that, I'm gonna tell you what I'm looking for. I'm tell you what I'm looking for. So what is this? The 953. Let's move this back a little bit so we can look at the 5-minute time frame without it revealing stuff to us. So let's go to like 949. If you don't know what I mean, it's okay. It has to do with the way that TradingView's backtest is set up. So I'm gonna go to the 5-minute and see if like we can get some. All right, so we have the higher time frame told us yellow line, but there's a chance the higher time frame could be wrong. Now, I super stopped believing in the higher time frame if we were to invalidate this bullish fair value gap on the 5-minute time frame. This one. This is very important, specifically the upper half. Specifically the upper half. So if at any point we start to turn around, I'm still believing in the yellow line. I still believe in the yellow line as long as we hold largely the upper half of this area. As long as we hold this, I still believe yellow is going to get hit. Now, could I be wrong? Could this happen? Let me show this. Let me draw this for y'all. Could this happen? What I'm drawing. Could this happen? I think we all know that that's possible, right? That's possible. Okay, so we all understand that that's possible. Copy. So because that's possible, good people, I'm not mad at a person taking profits right here, check, getting back in right here, and then taking it to the upside. Like what's wrong with that? I don't think there's anything wrong with that. At least you secured the bag. So once again, in real life, y'all saw me. I held through it all, but I'm not necessarily recommending that because I understood the risk that I did holding through that. All right. So I don't want to just do things on some hindsight stuff. No, I want to teach y'all the right way. The right way, in my opinion, was to probably take profits and then maybe look for a re-entry. All right. So let's see. Cool. And y'all feeling me in the chat. So let's work. All right. So we got the area drawn. I wouldn't say get bearish unless we lose that. Price gets so close to the target, then starts to retrace. And once we lost this area, you already know we got to have a deeper retracement. I don't want y'all to get it twisted. Like, you see, price went from 961 all the way down to 898. That's a 63-point pullback, my people. 63 points in the NASDAQ is not a little bit. So, although we watch this retrace, don't think that's a little bit of, that's a lot of money. That's a lot of money. All right. Now, anyway, I would have loved to see price touch this red area, but it's crazy because price didn't touch it. So guess what? You never got a chance for a re-entry because price actually does not touch this red area, although it usually would. It just didn't. It's a probabilities game. It usually would, but it just did not. So what do you do in scenarios where you get out, you want it to come to this area for re-entries, but it doesn't even go to the re-entry area. It just does this. What you supposed to do? You're gonna be like, dang, like I got out for no reason. But no, you didn't get out for no reason because you can't tell the future. That's why. So you just have to do whatever you can to protect your business. So you protected profits on your business. Good job. You did it up top. You want to re-entries, you didn't get it. Cool. What's your third plan of action? Your third plan of action is to understand when price is ready again to go to the upside. So for me, I want to see things that show me that price is ready to go back to the upside for real. Something that tells me it's ready to go back to the upside is price coming into this bearish fair value gap. How crazy is that? It's a bearish fair value gap, but it tells me that we're bullish. How crazy is that? Because everybody always told you that bearish fair value gaps are bearish, but it's like, nah, it depends where it's drawn. It depends on the location. So for me, price coming here tells me, yeah, now we bullish again, and it's probably gonna take the yellow shortly after. So for me, although I would have loved to see entries in here, unfortunately, my entry is gonna have to be somewhere up in this vicinity, and it just be like that sometimes. All right. So let's see what happens here. By the way, I'm bullish because we came into this area. I'm bullish. I just need something to give me a play entry based on. Because right now, there's nothing to really base an entry on unless I go down to the 30-second or the 15-second. Let's just check. Nah, there's nothing here. Nothing here to enter on the 30. I probably wouldn't go to the 15 in this specific context. There's nothing to really enter on right now, but I am bullish mentally. Like, I'm not waiting on the red area no more down here. I'm not waiting on it no more. Now I'm just looking for, how do I get back involved on this play? So let's see. We just chopping, obviously, going sideways as expected. Okay, chilling. And of course, by the way, if it would have come back into here, yes, I would still enter, but I'm just saying I'm not like necessarily waiting on it no more. That's what I mean. Because to me, yeah, I should explain that better. Like, basically, the reason why I'm not waiting on this anymore is because if this was truly the objective, it would have gotten there at the time that it was next to it. When I see it go this close to it and pop right back all the way into a premium, sorry about the vocabulary for the beginners, but when I see it pop back into a premium, to me, it's like, this is probably not the objective. Really, what I'm witnessing is probably just consolidation. It doesn't have to come here in consolidation. It could just chop sideways and eventually move higher again. So I don't necessarily need to wait on this. I might have thought that was the objective, but that doesn't mean it actually is. All right, so for me, I'm just kind of waiting on the sideways movement to be over based on the fact that it came all the way to premium after being right next to the objective. Okay, that's my point. Should I explain premium very briefly? Premium, I'm sorry, I feel like there's people in here that don't know what I'm saying. So really quickly, any given price leg, you could measure it from top to bottom. All right, so if I'm measuring it from top to bottom because we're in bearish movement, I'm gonna go top to bottom because we're in bearish movement. I'm gonna go top to bottom because we're in bearish movement. I'm gonna go top to bottom because we're in bearish movement. All right, bet. If price comes to the upper 50% of that price leg, that's called premium. This whole area is called premium. The upper 50% of that bearish price leg is called premium. The lower 50% of that bearish price leg is called discount. Okay, so my point is, for us to trade all the way next to this objective and then have a huge retracement into the upper 50% of the bearish price leg is very suspect. I'm no longer necessarily expecting that objective to get hit. Now I'm just waiting on price to tell me we back for the upside. All right, now you see price starting to move. Do we have things to base a trade on? Well, we're moving past these highs. I would like to see some type of fair value gap. Do we have one on the 15-second? We got one on the 15. I'm not mad at you taking this trade right here. I generally don't remember if this will work out, so we're gonna do this together. But this is a 2-point stop loss, technically. If you want to give it room, you could give it room. Maybe let's say you got in right here. You could give it room to like right here if you want to, and make this a 10-point stop loss if you want. That's okay as well. But I think it's worth a try because we are potentially breaking out over the previous highs, and you're a bullish person, right? You're a bullish person. You believe in the higher time frame objective. Okay, cool. So it's worth a try, good people. It is really worth a try. So what happens here? All right. Let's see. Price taps into it. So far, all right, we chilling, we good. Everybody heart beating. Y'all nervous? What's up? Let's see what happens on the trade. Okay, pops out of it so far. Consolidating, but it did cause a bounce. Nice little bounce so far. We going sideways. What's the next mission? All right, trades through it, and then you get stopped out on that trade. Now, are you tripping? Are you crying? Are you like, no, because it's a 10-point stop loss, and it depends how you did it. You could have done the 2-point stop loss if you wanted to. And I wouldn't even say that it didn't work. I would say more so, oh, let me do that one more time to explain my point. Hold on. Let me show y'all something. So let's say you got in right here, and you had to stop like right here initially, like how we had it, right? When the fair value gap worked because it brought you a new high, which is the point of any bullish fair value gap, is to make you run the previous highs on that time frame. What's the previous 15-second high? Right here, right? It's the previous 15-second high. Copy. All right, so it did its job. At that point, you're looking for breakouts because you're bullish. Why would you want price coming back through that fair value? So my point in saying that is, now that I see it worked and it delivered new highs, I really in real life would have slid my stop up because I don't want to see price use it twice. Okay, so initially the stop was down here, giving it room, and once it worked out in real life, especially people who trade me live, I do this all the time on our live trades. I move it up to mitigate that risk, and I always say things like, yeah, we don't want to see price come back to that area, so let's just, now we really only got a 3-point stop, y'all, and we good, right? We good. We got low risk, so God forbid price comes back down on us, we barely losing any money. Understand? So that's that. Now, so far, okay, you're nervous, but maybe it'll pop. You're giving it room just in case, whatever. But once it comes through that area, eventually, bet you only lost 3 points and you're chilling and you're waiting for the next opportunity. So they come back into this little nasty range. Let's go to the 1 minute for a second. On a 1 minute, maybe you like this area, right? Maybe you like this area if you want to try it out. I don't know, but whatever. Either way, bodies held it, and then you run to your target. So on a 1 minute, you get a different PD array. We like bodies holding fair value gaps. Good job. It worked out. Boom, target hit. So let's say you took this entry instead. You caught like almost about a 50-point play. This price leg is about 50 points worth. Congratulations. You made good money. Okay. So in the chat it says, so what kind of play was this? Scalping or day trading? For me, this is a day trade. It's just that it depends on style. First of all, a scalp by definition is a trade that lasts about 7 minutes or less. So even in itself, even if you look at the minutes time frame, this is more than 7 minutes. But that's just that section. Let's remember, this trade really stemmed from this entry. This is us finishing the trade out. So you really locked in profits here, and you waited for price to settle down with chop, and then you got back involved for continuation. So you kind of separated it. One trade turned into 2 trades, basically, But for me, I don't even really focus on scalp versus day trade more than I do focusing on me using my ability to know where the market is going, combined with my ability to know which areas should hold to get there. So even if y'all like think backwards, the first thing we did, good people, is we said the market is going to the yellow line. That's the first thing we did. The second thing we did is find what areas need a hold for that to happen. Because after we determined that, then we found this. Then we looked at this and this, right? But the first thing we found was, where's the market going? Yellow line. So you determine your destination first. And how do you get the destinations? That's another class. That's a class that only exists in my mentorship, respectfully speaking. And nobody should ever get mad because I teach so much for free, so much more than people's paid stuff. So imagine my paid stuff. Definitely y'all should tap in. There's a lot more than I'm not saying. But you guys can see that price, obviously move higher and stuff. So good job. And I'm gonna breeze through this part. Real quick. So same thing for continuation higher. I personally would have wanted to see price hold this area. So this area right here is a place to take profits on. If we didn't hold that, that's the area to take profits on, because this fair value gap is ridiculously important. If it doesn't hold, you're probably looking at a deeper retracement. And so let's go to the 5 minute just to show that real quick. All right, so this price coming down, and at that point, what are we looking at? Yep, that fair value we drew in the past from the 5 minute time frame. So we're looking at this. In the free Discord, you guys know I called this area out as well. I said I'm looking for bounces on this area. I don't think price will lose this area before going higher again. And then, I was gonna go in detail with that, but because of time purposes, I'm not gonna like talk about the entries and stuff that could have existed out of this fair value gap, but just for time purposes. But we use this to go higher as well. And then through certain things, you could notice chop was about to happen. But one thing I'll share with you before I kind of kill this demonstration is if we come down into a discount, right? If we come down into a discount, this is the next objective. If we pop out a discount, we want to see price take the previous highs. So if on the way up, you're noticing price have certain types of retracements, you know that it's probably not going to make it here, and you might be subject to chop. That's a gem that I don't even want to repeat right now, because that right there is super sauce. I'm not gonna hold you. So that's how I knew, like, oh, it's probably time to exit. We're not gonna really even have much going on for the rest of the day. It's also Friday afternoon. But certain things happen where we lost certain areas that we should have held if we were gonna see the high of the day. We ain't that. Once we lost those areas, to me, I'm like, oh, the rest of the day gonna be chopped. I'm not expecting the lows. I'm also not expecting the highs. I'm just expecting some BS in the middle. And that's exactly what happened for the rest of the day. We just stayed in the middle, kind of BSing. And eventually the day ended in here. But yeah. All right, so that's that. Now the question says, in the chat it says, we're in the Discord to talk to us with free memberships. Oh, do you talk to us with free memberships? Or any of those channels in the Discord, really. I talk to people in the free Discord in SMC Trade Talk. I talk to people on member questions if you have a question. If you post charts in there, I'll comment on the charts, things of that nature. So any of these three, just holler at me. Member questions is, if it's a question, you can ask it in here, or you could DM me. I answer all DMs. Y'all can see my DMs is empty. I got one person in my DMs because I didn't get to them yet, but I answer all DMs. So y'all can always holler at me. So cool. Yeah, I hope y'all got a lot out of that demonstration. I really do hope y'all got a lot out of that demonstration. As far as consolidation, in the chat, can I get ones and twos? Ones if you picked up something about a tip on handling consolidations, and two if like, nah, I ain't really getting that from today. Because it's more to talk about for surely. It's more to talk about. All right, Tony. Well, it's a lot of ones in here. Mo says you definitely replaying this one. That's what's up. Yeah, it's a lot. It's a lot. And I know I'm talking kind of fast just because of time purposes, right? I don't want to keep that here all day. And I got other things to get to in this class. So appreciate you, Mike. And for Tanya, she said, is this recorded? This is good. I appreciate you. Every class is recorded. And if you're in my free community and you missed any classes in the past, BT class recordings, this channel right here has every class we ever did in life in the free Discord. They're all here. They're all here. So, just binge watch this channel. Every class we ever did is in that channel. Binge watch them. All right, it's a lot of gems in there. I had somebody ask me before, they was like, or tell me, they're like, I ain't gonna lie. This woman said this to me last week. She's like, I ain't gonna lie, like, you give so much in your free classes that I'm like kind of hesitant about like signing up for your mentorship, because she's like, how much more, could you really say? Basically, she's like, I feel like you give so much in the free classes that your mentorship is probably like regurgitation, of stuff you already say for free. And I appreciate her honesty in that, but like, she's so sadly mistaken. Definitely no offense to her. I'm saying this just to make a point. It's like, she's very sadly mistaken. This stuff is nothing. I got mentees in here saying, if only you knew. And like, I'm telling you, so much more your head spin. Real talk. Y'all see it in the chat. So if that woman is in here right now, I hope she's in the chat so she can see. Like, I got previous mentees responding right now, or current mentees as well, saying there's a whole lot more. This is literally nothing. I'm not gonna hold y'all. Anything I say for free is like maybe 10%, and that's probably still too much. My main stuff never sees a free community. That don't mean it's some nonsense. I think we all can see there's a lot of value in the free stuff. It's just literally levels, is what I'm trying to say. So that's why I always encourage people to pull up to the mentorship so I can really talk. This is like, these are throwaways. Everything I'm saying here is like a throwaway to me. Like, yeah, y'all can have this. Y'all can have all that. It's in the chat. The mentorship is full of valuable information. Don't sleep. So definitely. Yeah, I'll respond to certain things after the recording. I'm gonna get to the next section right now. But Tiff said not even the basics. It's months full of classes. Real talk. These free stuff is literally, man, y'all don't even know. But while I pull up the next section of stuff, I just want you guys to think about it, right? For people who feel like, well, dang, the free stuff is a lot already. So should I do the mentorship? Like, I just try to think, like, bro, I am a real teacher. Like, I have, like, prior to trading, I have my credentials. I have a master's in education. I just only say that. I only bring up the degree to tell you guys I have real training in educating people, like real training. I'm not gonna, like, I know how to develop a brain. I know people coming in with zero knowledge. I know people coming in with a good amount of knowledge. I know how to handle everybody. I know what I'm doing. So don't think like, oh man, dang, so there's a lot more. Yeah, but I'm gonna give it to you in a digestible way. You're not gonna feel overwhelmed and nothing like that. And you got a lot of resources and support in the community to help you along. And I'm super responsive. So I'm just saying there's a lot more to learn and you're in the right place to learn it. That's all I'm saying. All right, so let's bring up this next section. Uh yeah, if cause somebody put the free community link in the chat for the person that just requested it. I appreciate you. Whoever does it, I appreciate y'all. Um, definitely. Homework is not bad, you got. Thank you, Tani. Thank you, Olia, for the help. I know I had if you scroll up, I posted a free community link earlier. So whoever could just copy and paste that, that'll be love. Appreciate y'all. Um, all right, so while they do that, and like I said, I'll get back to the chat in a little bit. For now, let's handle the chart debate. I put out a little quiz for the free community, and my mentees, of course. They always get the same quizzes, and this is what was shown. I gave 5 different pictures of potential order blocks. Are they all order blocks? Meaning, are they all good order blocks? Are only one of is only one of them a good order block? 2 of them, 3 of them? That's what I'm asking you. So let's show these order blocks for the people watching this on YouTube. So right now, this is the first one that I gave. This is order block number 1. Is this a good order block or not? My bad. I didn't mean to zoom in. Let's see the next one. Picture number 2. Is this a good order block or not? Meaning, is this a good expectation to have or not? All right, number 3. Is this a good expectation to have or not? And if you're watching this on YouTube, I suggest that you pause each picture and start answering it for yourself. I need you to tell me which order blocks is actually highly probable. Is this one a good one or not? I know somebody in chat saying she chose 3 of them. Okay, bet I'm about to reveal it in a second. And then this and same thing with number 5. So I gave these 5 different scenarios, and we're gonna find out they get OBs. So you could select all 5. You can select 1. You can select 2. Let's see what the free community is talking about. It seems like there's a variety of answers here. 13 people agree with picture number 2. 10 people agree with picture number 5. 8 people with 4. 5 people with number 3. So there's a variety, a real variety. Let's check out the mentees and see what they talking about. Let's see if the mentees got this down. And we're gonna see. So on the mentee side, it looks like, wow, overwhelmingly 2 and 5 are they're screaming like, 2 and 5 are definitely highly probable order blocks to my mentees. I have 4 people pick number 3, and I had 1 person pick number 4. All right, so it seems like 2 and 5 are fan favorites. Let's reveal these things one at a time. All right, so for picture number 1, let's see what we got for picture number 1. Big quick answers. Let's throw this to my monitor. Hold on. I'm trying to. All right, perfect. So I got that over there. My phone. I'm using my monitor low key. I'm gonna try to pull these things up like side by side. All right, so picture number 1. Is it a valid OB? Let's see it. Y'all. No. Picture number 1 got traded all the way through. All the way through. All the way through. Bad OB. Bad OB. So number 1, if you pick number 1, incorrect. Very unlikely. Let's see for picture number 2. Oh, my bad. I'll skip it. My bad. Let's go to picture number 2. Yup. All right, cool. Let's pull that up. Picture number 2. Is this one going to work out? Congratulations. If you took this play in real life, you would have, made money to the downside. So number 2 is definitely one of the answers. So shout out mentee, shout out to free people who also put that as well. Correct on number 2. All right. Let's see number 3. What we got? What we got number 3. This one right here, I feel like had a lot of people head going like, I'm excited to reveal this one. Is number 3 a good OB? Absolutely not. Definitely not. Definitely not number 3. That ain't it. That ain't it, fam. That ain't it. I ain't gonna lie. Bad OB. Bad order block. Let's see number 4. What we got on number 4? Um, Bad OB. Another bad OB. Number 4. This one I think killed a lot of people on the free side. Like my mentees know a lot better than this one. They better at least. This ain't it. And I think you guys see like massive bullishness coming out of this area, and people tell you to take the opposite color candle. And it's like there's just a lot more criteria that comes to choosing the highly probable order blocks than that. So that's why I'm sure a bunch of you see me post the order blocks masterclass coming up this Saturday at 11 a.m. And you might think, well, I've learned order blocks from this other guy, or I learned order blocks from this, that, and the third. And it's just like, I just encourage y'all to not sleep on information because people, including mentors, don't understand OBs like they think they do. If you think just because we have massive movement out of an area and there's an opposite color candle, that OB is going to work every time, you're sadly mistaken. There's a lot more to learn, a lot more to learn. And then lastly, number 5, is this a good OB? Let's find out. Number 5. Boom. This is a good OB. Shout out people who chose number 5 as well. So yeah, good stuff. Good stuff. Seems here. Mentees did their thing with that. They know 2 and 5 were the only answers there. 3 and 4 were not it, but 2 and 5 were definitely abundantly the answers right there. So good stuff. Good stuff, Timo. And everybody in the chat. And Vicky, I'm glad you're able to find the free community link. Thanks for posting that. So cool, good stuff. I think that's fun. Like, as far as like order blocks, like I said, I got a whole masterclass coming out. We're gonna do on Saturday. If you can't make it live where you can ask questions and everything, it's okay. Everybody who signs up, I'm gonna send a recording to your email. So stay tuned for that. Now, last part of class is just predictions. What we predict is gonna happen in the market next. So what do we predict is gonna happen in the market next, man? All right. Well, this area right here, I wanted to erase it for the purpose of the back test. I'm gonna get back to the NASDAQ, but if you're my free community, we know we've been looking at bodies holding this hourly BISI. We wanted to look at bodies holding that hourly BISI, and so far, bodies are still holding it. We're gonna see how that shape up going forward. Had a real bullish open today. We're gonna see how that shape out. But that area is important to me. I would say it's a little suspect. I'm not necessarily here saying, yo, I think bodies will 100% hold this area. Like, I'm not speaking on it with conviction like I have on different other areas. I definitely liked it over here. I didn't like coming back to it though. So bodies are still holding it so far. We're gonna watch it, but it's exactly what I said. We're gonna watch it. I wouldn't necessarily like full port my account right now on this bullish fair value up on the hourly time frame. But we'll get back to that. All right, so let's head to the economic calendar, because at the end of the day, you don't want to head to the charts without knowing what news events to watch out for. Whoever been in a play before and you see a huge flash candle come and you're like, yo, where did that come from? It's probably from something that you could have watched out for on this calendar right here. So make sure every day before you trade, you check this out. Also, we're in a market where your president, he's a pretty crazy guy, and words that he says causes flash candles out of nowhere. So you also want to check out, when is Trump speaking? Subscribe to someone like Walter Bloomberg on Twitter. Walter Bloomberg will give you like real-time alerts on Trump's words, for example. So every time I see Trump talking, I start making sure I got stop losses set just in case I get like a flash candle and stuff like that. So you want to just keep your eyes everywhere. But as far as this week goes economically, to me, I ain't gonna lie to y'all, I can't even sugarcoat. This looks like a chop week. I hope not, but it looked like a chop week. Usually the FOMC minutes, it just chops into it. The Wednesday itself is choppy. You might see a flash candle at 2 o'clock when it come out, but just in general, it's just not usually a good setup for price action typically. So FOMC is when Jerome Powell goes up there to the podium and speaks. But The minutes of the FOMC is not Jerome speaking. So when you look at Wednesday, don't think Jerome Powell's taking the podium, because he's not. He's not. It's just a document recapping what they talked about last meeting, pretty much. And that comes out at 2 o'clock on Wednesday. You might see a quick flash candle, but nothing to trip on. But regardless, this week is usually trash. PMIs on Thursday, nothing to really talk about. And there's nothing on Friday. Like, it's August. I told y'all August is a horrible month to trade typically. So just don't do too much. Keep your targets conservative this week. So Vic said Jerome speaks at the Jackson Hole meeting on Friday. Well, that's not on his calendar. That doesn't mean that you're wrong. I'm just saying it's not on his calendar. So that's news to me. It's on Forex Factory. Thank you. I'll probably have to check that and see that. So cool. So people in the chat saying that boy Jerome speak on Friday. And I know in 2022, Jackson Hole was crazy. That day was crazy in the market. But at Jackson Hole hasn't been as crazy since 2022. But still, something to watch out for. Anytime Jerome is speaking, they said it's at 10 a.m. on Friday. Check that out. Make sure you be careful if Jerome Powell is speaking up there. So let's take it back to the charts. Take it back to the charts. All right, so I'm gonna get back to futures. Let's take it to Forex for a second. I'm gonna get back to futures. I'm gonna get to options. I'm gonna get to crypto. I'm gonna get to all that. Let's just start with Forex. Let's start with Forex. So on the dollar, US dollar, I told you guys, man, it's been a pretty consolid, it's a consolidation time period right now on the US dollar, which is gonna play into dollar pairs. So something I was watching was there was a 4-hour SIBI up top. I told you guys, as long as we stay under this 4-hour SIBI, I like the dollar heading to the downside. And then, we ended up remaining bearish. That's good. Everything good. And even just more recently, we rejected this 4-hour BPR, SIBI, anything, however you look at it. We rejected this, and we want to see if we can keep the momentum going to the downside. If we're in trend, right? If we're in trend, we shouldn't see price invalidate this 4-hour bearish fair value gap right here. If we're in trend, if we're still in chop, if we are still in chop, it's very likely that price could invalidate this. It doesn't mean we bullish. In my opinion, if it invalidates this area, we're just probably gonna still be moving sideways on the dollar. All right, so that's a little temperature check for the market to me. Like, if I see the dollar come back above this fair value gap, it's telling me, oh, we probably still chopping. All right, it's like a trend temperature check. Either way, overall higher time frame outside the chop, maybe going into September, things of that nature, I remain bearish on the dollar. We're gonna see how that play though. So yeah. Now let's get it into dollar pairs, Euro USD. Same thing. I remain bullish on it. Well, I guess not the same. The opposite. I remain bullish on it on a higher time frame. But the thing that's the same is that I think we still gonna we've been in a consolidation time period on them. No real breakouts in either direction. We've been moving up lately. This is the 4-hour time frame. This is really nice. I hope that we maintain this upside. But based on the dollar setup, it's just hope, right? I don't really know if we're gonna get that breakout right now. Just the fact that it's August, and like I said, there's no major news events to move the US dollar, so I just don't really see much of a breakout happening. But you could do some temperature checks. Let's see if there's anything out of temperature check on. See this movement. There's no fair value gaps on this upside. I don't like that. The only, like, for me to really like, and don't get me wrong, I'm involved on a euro trade to the upside right now. Like, I'm in buys on euro. It's a swing. I'm in profit, but I'm expecting on my bullish trade right now, like, kind of like movement like this. That's what I'm expecting. What I would love to see on my euro trade is us break over these highs right here with fair value gaps in that mix. And then, of course, if we break over those with fair value gaps in the mix, I would like to see us respect it to go higher. So that's something that I'll be watching for on euro. But right now, once again, expectations are pretty low on dollar pairs in Forex, good people. All right, so moving on. Same thing with British pound. The only thing about British pound is I had liked this 4-hour BTC for higher. So I want to see it still maintain this area overall. I don't really want to see it invalidate this 4-hour BTC. It's moving pretty okay on Thursday and Friday, but still. And I want to see breakouts above these equal highs. out of this area. So we'll see if we get it to maintain that. New Zealand dollar, I tell you guys, between these two PD rays, this monthly SIBI, this daily BISI, just I don't think you should trade inside of it. We just did a whole section of class on not trading inside of chop, so that applies to every time frame. USD CAD, I'm looking for this to head back to the downside, but I just think there's gonna be consolidation first. Now there's a potential for an AMD setup here, but instead I just feel like we're going to chop and then break down. But I'm just saying there's a potential for the fact that we did this, right? We consolidated, we manipulated in that direction. Maybe we're starting our move to the downside right now, but I don't like how it's, you know what I mean? Like my expectations are very low on Forex. Just reiterating that. USD CHF monthly SIBI still rejecting that, but we are chopping up just like everywhere else. I would like to see this move to the downside eventually once the chop is over. But that's really all I can say on Forex. That's Forex altogether right there. Clearly, my expectations are low. But overall, higher time frame picture, I think that for the US dollar, anything that goes to the upside on the US dollar, I think is going to get shorted eventually. So what I do every time the US dollar moves higher is I look for bearish PD rates to probably send it back to the downside until it hits the point of no return. So there's always an area where I say like, okay, that's my invalidation area. Like I'm stopping looking for it to go lower if it hits that certain spot. We're not at that spot yet on the dollar. So as of now, any type of consolidation, I still think is going to break lower eventually on the dollar. So anything that's a dollar pair, I think is going to go higher. All right. Now, Mo says, is August the slowest trading month of the year typically, or is it just the summer in general? From my experience thus far, I see August usually being that month where that's just not it. July be all right. August is usually just where it just I don't know if they're on vacation, I don't know what's going on, but it's like they turn the algo off in August. Like, man, even AI is on vacation in August to be fun. Like just trash. But word. So let's go to Bitcoin. Let's talk crypto for a second. Crypto, just like everybody else, is kind of in chill mode. Yeah, I know no weed facts. Will is on vacation. That's an inside joke with the mentees. Shout out my boy Will. But so on the coin, man, the important coin. Yeah, I know we've been calling every bounce on Bitcoin, including this bounce most recently. We wanted to see it use this to take it to 126. Guys, we got so close to 126, my people. We got to 124.5. Oh man. Dang, do I think we're not gonna get there now? Come on now, let's be real. I do think we still gonna go there. It's just like everybody else. We in consolidation. Eventually, I think it's gonna break higher. That's all. So I remain bullish on Bitcoin and all other cryptos related. Ethereum came so close to our target. We called out all these bounces on Ethereum. For Ethereum, in the short term, I would watch this daily BISI right here, but I do have a subtle feeling that it's gonna move down into a discount, meaning a discount of this price leg. Meaning if you measure that price leg, we're looking at areas under 50% of it. So I'll be looking at there's actually valid reasons we could bounce in this fair value gap as well as the one that I highlighted. I'm looking at both of those fair value gaps. They're both valid to me. So overall, this section, I think Ethereum is probably gonna invalidate this one, come down into this, and then go and run those all-time highs. But at the end of the day, we're still inside of this one, so we'll watch it. But I'm just getting subtle feelings it's not gonna hold. Subtle feelings. But it's an if-then statement. If not this, then these. Either one, my fault. Either way, I'm bullish on Ethereum. So even if it comes down here, I'm looking for buying it out of that area to go to all-time highs. All right. Nothing new about XRP that I haven't said before. So let's go back to futures. Let's go back to the futures side, man. Where my son Nasdaq at? Where my son Nasdaq at? Let's talk about it. All right, man. So. For me on the Nasdaq, like I said before, as long as we hold this general area right here, I still believe in 24,380 and potentially 24,915, but definitely 380 is the first objective right there. But we need to hold this area. An area I pointed everybody to in my free Discord was this hourly bullish fair value gap. right here. And of course, with fair value, if you want to see bodies hold the area, I do not think it's coincidental that bodies have held this fair value gap. And I'm telling y'all, man, bodies are just the most important thing to look at, not wicks. I will say though, in this specific context, my people, I prefer bodies to hold the upper half of the fair value gap. So since I saw bodies come to the lower half of the fair value gap, it's suspect to me. So although I do think NASDAQ has a strong chance of moving higher from here, I also can see this being what we call a failure swing, where it moves higher at first, but then eventually falls to the downside. So I'm very much keeping my eyes on that because of how we're using a fair value gap. It's telling me it might not hold. So we will still keep our eye on it. It's been a great point of interest because, we did make, just like I showed in the demonstration earlier, we made good money on the initial bounce. We ran the Hazard consolidation. All that was good, but we ain't had no continuation. Price ended up coming back down, chopping, going sideways, dropping again, still holding our area, and we chopping again right now. So I wouldn't be surprised to see it fall through down here. That's so what Pat said. That's a part of the reason why I'm also suspect on the area. So to dig even deeper, I'm gonna elaborate on what Pat is talking about in the chat. She said, thoughts on the 4-hour invalidation of the BISI, the 4-hour BISI invalidation. So I'm about to explain right now. Part of the reason, not the whole reason, but part of the reason I told y'all that I want to see bodies hold the upper half is because in that upper half, it would simultaneously satisfy the 4-hour bullish fair value gap. I'm gonna show it to y'all. So now I'm about to draw you a 4-hour bullish fair value gap right now. So you see this 4-hour bullish fair value gap, I just drew it. I would love for this golden spot where the 1 hour and the 4-hour, where they overlap, that was my golden spot for bounces. So at first we were holding it as far as bodies go, of course, we holding the upper half, things look good. I'm like, all right, great. Now you can see even on the 4-hour chart, we invalidated the 4-hour bullish fair value gap. I ain't like that. So although I told y'all my favorite PD rate in this context is the hourly one, I still got my mind on the fact that we invalidated the 4-hour. So that's why I say, I know so far our hourly one is holding, but at the same time, my people, is super ultra suspect right now. So yes, we had a fire nice like pop out at open just now. Price ran a significant amount just now, but it might end up coming back down. So be careful of that. I think the Dow gave me a little confluence to expecting potentially lower prices as well, but I'm gonna show you the Dow in a little bit. So what to expect if NASDAQ loses the hourly BISI? One, I would now not look at this 24,380 target anymore if we lose that. Now, what I kind of expect, I'm not even gonna hold y'all. I don't expect a massive downtrend under that. I low-key expect something more of this nature. And then a theory that I have very low-keyly is that we will break down in September. In September, we break down to this daily BISI we was looking at before. This would be the bounce spot, and then we would run to much higher targets with a massive bull run to probably end the year out. Now that is a theory. That's a theory. I know it's a stretch right now. It looks like a lot has to happen before that can happen. But I'm just saying, I don't really feel like if we lose the hourly BISI, if we lose that, I don't think it's necessarily, oh, we super bears get puts, let's go, we going. I actually kind of feel like we're gonna like go sideways for a minute before we actually potentially retrace. And if we retrace, I feel like this is where we're gonna retrace to before going higher. But it's like I said, it's a lot that has to happen before that gap, man. It changed to Rella market maker. Just wait. Yeah, I'm not a market maker. Those is my ops, but yeah, I definitely have called out a lot of stuff in the past at this point. But right now it's just like August is usually sideways. A lot of markets right now are sideways. So it just kind of gives me a position of like low-key cash. Like I'm almost like cash on the market right now, waiting for this sideways movement to be over before I make the next like super confident projection. Right now, I don't expect too much. Now, if once again, if we hold this and we keep going, that's trendy to me. Because this is the trendy fair value gap, being like this is the one we're supposed to hold if we're still trending. If we don't hold this to me, we're not trending to the upside no more. So yeah, just be careful. Just be careful. I'm giving y'all things to look at, you know. All right, so let's go to ES right quick. ES, this area right here was important to me, holding this 4-hour bullish fair value gap. Clearly, we've been consolidating, but we haven't lost it. So I would kind of say the same thing I said on NASDAQ. Like if ES loses this area, I don't feel like it's gonna be aggressive. I feel like if we lose this area, it's gonna do something like this. I don't know. And then, like I said, same thing. We'll like drop before we pop. But it's super speculative right now. I have to give y'all updates in my free community. So once again, if you're watching this on YouTube, click the link in the description for the free community because that's where I'm gonna give you daily updates. Right now, it's a little bit hard to say in the middle of chop. Let's go to the down. But my fault. But you know what to watch on ES. We're watching this 4-hour bullish fair value. That's an important area. It already developed new highs, which is also suspect because we already tapped into it. It brought new highs to the market. That was badly drawn. It brought new highs to the market, but why we came back down? See what I'm saying? But then again, we came back down and did we run the lows? No, we ain't run the lows. That's not good signs for a trend. That kind of gives me this type of vibe, low key. Because how we swept the highs and failed to run the lows just now. Super suspect. We might chop in the middle. Keep your eyes on that. So like I say, don't do too much right here. Remember that it's August. It's August. There's no news events this week and nothing that's really of concern. So the Dow, I told y'all this is the golden spot on the Dow. I was waiting on this entry for forever. Golden spot on the Dow. I'm in a trade on the Dow to the upside, but you know, I'm watching it closely because same thing I was talking about with the S&P just now, right? Peep this. We had highs right here. We swept these highs. Great. Cool. We come to the downside. Did we go aggressively under the lows? Nope. Guess what we did? We swept the lows too. Tapped into this area. That's cool. But now, all right. So we swept both sides. Copy. We finally moved past the previous highs, and what did we just do? Swept it again. Super suspect, man. Be careful trading in here on the Dow. I think Dow's going all-time highs, but there's a chance Dow could play in this range before it goes there again. So I think it's going all-time highs. I hope it goes right away. I do hope it goes right away, being that I'm in a Dow trade. I got in my Dow trade in this vicinity. But you know, it really could come back down any second now. So be careful. Be careful. We almost done. The Russell, gotta watch this area. This is an extremely important fair value gap for the Russell. Ideally, the upper half should hold if we're gonna run 2,371.1. And of course, I'm looking for higher prices, but just these equal highs should definitely, they are likely to be next. And I think we should use the upper half of this daily BISI to run those equal highs here on a daily chart. So I think the Russell has a decent setup coming out of this. I know everything's consolidating, but the Russell can make this quick move before maybe it continues consolidation itself. But I think that's going to happen. I think there's a setup out of the Russell right now. Just based on that, we're going to see. CL, I told y'all CL is going to do an AMD setup. So if you want a visual of the AMD setup, a couple weeks ago, I told y'all we witnessed the accumulation. We witnessed the manipulation, and I told y'all I'm expecting distribution next. What we saw, distribution. This is the deviant AMD for distribution. We finally ran the lows. And I also told you guys to be careful of chop when we run these lows and be careful of a sweep of those lows versus a continuation. Be careful of a sweep of the lows based on how we're running the lows. So I wouldn't be surprised to see CL make a move to the upside out of nowhere this week. Just make a massive move to the upside. Be careful of that. I'm not saying it will. I got my eyes on it. Do I like what I see as a bear? If I'm a bearish person, I don't like how it's moving. If I'm a bearish person, I don't like how CL is moving right now. Could it keep dropping? Of course it could. but I don't like how it's moving. So do not get caught off guard if CL has a massive bullish day or series of days that leads us into this daily fair value gap up here that I just highlighted. Don't be surprised to see that happen on CL. All right, and almost done. We got gold. I told you guys gold is gonna come into this 4-hour bullish fair value gap, and nothing has happened since. And that's perfectly okay, because I told y'all I didn't want to trade it into it, even though I was correct about it. I didn't want to trade into it. I don't want to trade out of it. I don't want to trade gold inside of chop. I told y'all I don't trade inside chop. I only trade outside of chop. So there's other tickets that's moving, and well, not that many, but I'll trade anything else besides something in the middle of chop. And last but not least, well, no, my fault. We almost done though. QQQ and SPY. On QQQ, the only area I'm watching for potential trend would be this area right here. This area right here, this 4-hour bullish value was the only area I'm watching for potential trend. If we lose this, QQQ definitely has a strong chance of making a deeper retracement. But of course, just like I said about the NASDAQ, I'm very suspect on this type of movement before the drop. So keep your eye on that. And SPY, you could watch this area, the daily bullish fair value gap at VI on SPY. You could make your rectangle exactly how I made mine. You could watch that area. I think under that, SPY should have a much deeper pullback. This gap is likely to get filled right here under this, but just be careful of chopping first. That's all I'm saying. And couple options tickets for y'all that I like. I think I'm gonna show. I mean, Cat. I told y'all on Cat. I think Cat is probably gonna make a move down into 380. I think 380 should come next on Cat. But for me, you see this. Let me go to the daily chart. On the daily chart, y'all see this fair value gap up top. I don't really want price going back there, to be real with y'all. If it does go back there, you really want to see it rejected. But if we start trading above this fair value gap, never mind. Forget that whole play. But right now, I think Cat is seeing a retracement down into 380. I like 380 on Cat coming next. So keep your eye on that. You know when it's wrong, it's probably wrong if we come back above that daily fair value gap right here. And then last but not least, oh yeah, I think it's Delta. So I know I talked about Delta in my Discord. I like Delta made a move to the upside. I did get in, I'm in profit right now. We'll see if that maintains. I like Delta seeing all-time highs right now. I like the sweep. I like the bullish fair value gap right here. I like the pop out. I like the type of liquidity we're trying to run. For Delta, I told you guys I wouldn't want it anymore if this daily bullish fair value gap gets invalidated. If it do come into it, it really should maintain the upper half of it. I wouldn't really want to see it come to the lower half of it. If it kills the whole area, I'm killing the trade altogether. But I think even if we move backwards, I would like to see that hold to take us to all-time highs, wherever it's at. Yeah, all-time highs up here. All right, so that's Delta for you. I showed y'all Cat, showed y'all everything in every market. We talked about commodities, forex, crypto, options, futures, everything. Because at the end of the day, these technicals apply to every market and every time frame. Be careful trading in August. Keep your profits conservative. Okay, don't be greedy this month. There's not the month to be greedy. Please, please, I'm telling you, my worst month ever was in August when I was first starting out. Don't be like me. All right, if you're watching this on YouTube, subscribe to the channel, like the video, click the link in the description for my free community, my live trading, my mentorship, the free course. Definitely get the free course, especially if you're a beginner. My Instagram, everything is in there. My website. If you want to get into contact with me, check the description. Keep God first in your life. And with that being said, that is all she wrote.